So, good morning, good afternoon, good evening, wherever you are. This is yet another episode of the Two Tokens Studio podcast. Today in the studio we have Dennis Post of EY, Ernst & Young, and Eric Hensel. And we're going to be discussing fiscal concerns and utility tokens. And that's a very broad subject. We'll have an expert session later this afternoon here in The Hague. But before we start, maybe you can introduce yourselves. Dennis, you first.
First of all, thank you for having me here. So I've been with EY for 21 years now. And in my daily life at EY, I focus on serving clients in the blockchain space, in the digital asset space more broadly, but also help clients navigate through the, let's say, complex tax landscape around metaverse, NFTs, and Web3.
Interesting. So you take the whole spectrum.
Absolutely.
And Eric.
My name is Eric Hensel. I'm the co-founder of Mintage, and we're a company which provides like corporates, but also brands or artists into Web3 technology. So that's everything from Discord to NFTs to tokenization. And in the space for 2.5 years now. And yeah, it's getting more and more excited, I think.
More and more exciting in a way that you see more adoption, more consumers, more companies using this?
Yes, we see two things. First of all, we see that people want to start in Web3. So they ask themselves, what is Web3? What is NFT? What is blockchain? And the second thing we see, and we were just talking about that for a bit as well, is that what you see is that people really think about NFT as the monkey pictures. So the monkey JPEGs. And that's what we are trying to say to companies, and which we're like a spokesperson for, is that NFT technology is so much more than just the monkey pictures. And what we see is that people are looking to, like, what kind of solutions can NFT technology offer us? So for example, we talk to Get Protocol, which do ticketing on blockchain. So a lot of things are in development, but what we see is that people are still thinking about it as the monkey JPEGs. They think like, oh, NFT, that's a dirty thing, or it's really bad. And I always say, why do you think that? It's like you say, MP3 is not a good thing. Well, it's just a thing, you know what I mean? It's just a technology. And so I think it's always funny. And people, what I see in the corporate world is that somebody says something and people are just like chit-chatting all the time, but they don't really know what it is. So they say, are you still in NFTs? Aren't NFTs dead? And then they say, well, I guess you have NFT on your phone if you have a certain ticket or a certain token. So, but people are just, they start talking about it, but they don't really know what it is. At least that's what I experience. I don't know what you see.
So you see a different narrative starting to exist, from consumers and companies who aren't really technical, but they are interested in starting to use this.
Yes, and what I see, what I think is quite bizarre is that so many people have an opinion about it, while their opinion is based on what they read in the media. And then they say, oh, well, I know someone and he bought an NFT and he lost like 5,000 euros. And then I say, yeah, well, that could be, but the technology is still there, and that's the same with crypto. And it's, I don't know, everyone just talks about it and talks about what they heard or what they saw, but they don't talk about use cases or what can you do with it, but they just talk about it like, oh, I heard a story about, or like 2 months ago, I saw on LinkedIn, I saw a client of us, and he was at South by Southwest, and then he said, now I finally know NFT technology is dead. Then I thought like, this is, but what I want to say with that is that people are just, they hear something and then they put it on LinkedIn like it's the truth. But I think NFT and blockchain technology is the solution for so many things, and it can be a digital art. It can be provenance of art. It can be ticketing. It can be loyalty. I mean, you have so many things that you can do with NFT.
Well, and that's the nice thing. NFT is non-fungible token, and the Two Tokens Foundation works on use cases. And 9 out of 10 use cases have a non-fungible token. So to us, a non-fungible token is just a fact of life.
Yes.
Speaking of facts of life, there's two things certain in life. That's death and taxes.
For sure.
What about taxes in the token economy? Do you see more questions coming from entrepreneurs and end users?
Absolutely. And let me just first start by saying and echoing what Eric just mentioned. I think for me, it has a lot to do with, technology hype cycles. And in 2021, we saw a lot of the hype around, those monkey pictures indeed. And now the hype is away, but the technology is still there. And this is also what I see with the companies that I support in their Web3 journey. They are using NFTs as an extension of their digital strategy to enhance their marketplaces, to discover new sorts of revenue models. So that is here to stay. And then on the taxation part, obviously that's where it gets tricky, because and that has to do with a couple of things. I think first of all, as a tax professional, whether you're in government or you're a tax advisor or in-house tax professional, you need to understand how the technology works. And so that's the first thing. And then if you understand the technology, then attach the tax consequences to it. And that, I think, is already, for a tax professional that is very used to, let's say, old-fashioned tax systems. And generally tax systems, they lag like 10, 20, maybe 30 years behind on technology developments and societal developments, I would say. So slowly but gradually, we are starting to understand what NFTs are and how we should tax them, for example, on the indirect tax side. And I think it's also fair to say, and this is a little bit of a boring response in a sense, but from a tax perspective, there's no like one size fits all when it comes to NFTs. It really depends on what is the underlying asset, what does it really represent. And if you understand that, that is also the starting point on how we think about things from a tax perspective.
I think, for example, we did quite a big project last year, which was with a famous DJ, and there was also art involved.
Mm-hmm.
And then it was quite funny because we had some conversation with the authorities, and they said like, okay, so what kind of product is it? I said, well, it's a piece of art, but you also get utility with it, and this and this and this. So what is it? And is it art? I said, yeah, well, but it's also utility. And then, okay, what's the product? And I think that's for people who work in taxes, I think that's very complicated to say, what is this product? Because it's not, you don't buy a microphone, which costs you 100 euros and you pay 21% VAT. So what is the product? That is, first of all, the first question that is really hard to answer because it's so new. And yeah.
Well, it's fair to say, and to Dennis, yes, we need to upskill the skills of the professionals, right? So a lot of people, our generation, are afraid to admit that sometimes the developments are going a little bit too fast. And with the foundation, that's what we do. So we have this masterclass, specifically for those people. And we look at use cases, we look at the token taxonomy, we look at value engineering, because to your point, it is Web3, is going next level. And so we need to help that professional, those professionals in grasping the possibilities of tokenization and what's involved. It's not just technology; it's also fiscal law, it's legal regulatory, it's business cases, and so we have to help those professionals rethink their business cases. But speaking of which, in all the years that I've been in the token economy, and it seems like a lifetime already. The one subject that's really not getting the attention I think it should is fiscal, right? And I don't know, why do you think that is, Dennis?
Well, let me just first say that I echo every opportunity to give more attention to tax law in general, and I guess when it comes to technology, even more so. I think it's a tough question in a sense, but I think to some extent it has to do that if you look at the emergence of blockchain technology and crypto, I think people initially had the thought we're going to get away with, no regulation, pseudo-anonymity, and obviously also potentially, we don't have to report any taxes. I think everybody is realizing that, regulation on crypto and tokens is here to stay. It's coming more and more. I'm sorry, it's a complicated word in English, but pseudo-anonymity is very complex in a tax world. Because, if you look at NFTs, for example, we need to understand, who's transacting between the two parties. And if we don't know who's transacting, then obviously we can't apply the proper VAT rate, right? So that's a starting point. If people think that they can get away with, that they don't have to report crypto in their tax return, obviously that is changing because regulation is coming on its way. In the EU, we see it coming. The OECD has provided a report on that. So countries are starting to implement information reporting simply because tax administrations currently lack the information to get that is necessary for, the taxation of crypto assets more broadly. So I think, regulation is coming. It goes hand in hand with tax regulation. So people are starting to realize we can't get away with it. So hence also that we see more questions, people realizing indeed NFTs, hey, how does that work with VAT? Can I get away with not applying VAT on my NFTs? Those types of questions are coming more and more.
I also, what I see in practice a lot is that, for example, from banks, they raise questions because they truly don't understand. So I will give an example. I know a company and they got paid in Ethereum, and the Ethereum got worth like 3 times as much. And then the bank said, what is this? How could you first had, I don't know, let's say 100,000 euro, and now you did a project, and now you certainly have 300,000 euros. How could that be? I don't understand. And then it comes back, and they block the bank account. They block it immediately in an instant. And then they say, well, you're doing money laundering.
Yeah.
You're doing money laundering. You're a fraud. And well, this is just a very company who works for corporates like Heineken and McDonald's and who knows what. But what I think is that things are evolving so quickly in the NFT space, but also in the crypto space. And then you see banks, but also the government, and they just don't know what to do with it. And it's also like the example I just told you, like, if, for example, if you give away an NFT, so I give away an NFT to you or to your employees, what do you give away? Like normally you say, I give away, I don't know, a car or a phone, and the phone is worth 1,000 euros. But if I give you, you're my employee, I give you an NFT. What do I give to you? Do I give something from 100 euros, 1,000 euros? What's the value? Like, is it 10,000 euros? Nobody knows. And I think because it's not really clear what the product is or how to value the product, because an NFT, it's just like art. It can be worth 1,000 euros, 100 euro, but it can also be worth 2 million euros.
And also depends how long you want to keep. For instance, if you buy a Picasso and you want to hang on for 10 years, the capital gains tax is different than if you were to hang on it for trade for 6 months.
Yes.
Right. So that's a different. But isn't it really new wine in old bags?
To some extent, yes, because I've been, as mentioned, I've been working in the tax industry for like 21 years, and when I talk to my colleagues and also my network around this topic, people said, this is somewhat similar to the emergence of, e-commerce back in the days, back in the 90s, and ultimately we wanted to bring it back to the, transactional level, and if we understand the transactions, that is obviously also the starting point on how we tax things. And I think there's a lot of truth in that. But I think we also need to recognize that this technology is a little bit more complex in a sense that because the decentralized nature, because you are able to, let's say, act somewhat under the radar, at least from a recipient point of view, obviously not from a company's perspective, because I see a lot of companies, luckily, that want to do the right thing. But then they face the challenge. So how do we actually do the right thing? The example you just gave, we want to do the right thing on NFTs, but tell me what the right answer is. And I think tax administrations are still grappling with that. And
but the funny thing is, I remember doing a masterclass for the European Commission, in 2017, and they said, "Oh, this is transparent. It's immutable. This could be a great solution for VAT carousels, right? Because." Yes. We're now 6 years into it, 7 years. It takes some time for adoption, huh? So where are we on this?
It is interesting. I was talking to someone from the tax authorities, and he said, we put this in the same basket as people who get a lot of cash money. So, for example, hairdressers or second-hand car dealers. So people who get a lot of cash money, they have the same regulations for us as an NFT company as they do for second-hand car dealers, because they say, well, you get money and we don't know where the money comes from. And then we say, well, we can all verify it because it's all on the blockchain.
Yes.
And then they say, well, but how do I see that then? Is there do I get a PDF or how does that work? And then they say, well, here you have a smart contract or you can see this and this. And then they say, well, okay, what's the smart contract? So there's so little knowledge also from the tax authorities. They have so little knowledge about NFTs and they just, someone made a lot of money with crypto. That's the thing they can understand, but there is really it stops there. They understand crypto a little bit, but when it goes further, for example, NFT trading or whatever tokenization, they have no clue. At least that's what I experienced.
Yeah, I agreed. And I think, so from, let's say, the starting point when blockchain first emerged, people were starting to think, hey, this could be the next big thing from a tax administration perspective. And obviously VAT fraud was obviously the first and the most lively example. Because if you take, let's say, the challenges that tax administrations face, on the one hand, I think, the VAT gap only in the EU is already like 150 billion or so. So, how appealing would it be if we have a system which is completely immutable, where all the transactions are indeed on the blockchain, and we would actually solve for that particular problem with blockchain? Well, that's the theoretical part. And I think that's still a compelling exercise. And I think also that tax administrations and also the EU need to do a little bit more on that. And luckily, last year in October, there was a resolution adopted in the EU where the Commission was actually given the assignment to explore this more thoroughly, explore what blockchain can do for more robust tax systems. But myself, in my, let's say, second life, I'm also a researcher at the University of Amsterdam. I've just finished my second paper together with one of my colleagues, Dr. Cipollini. We actually focused on, those fundamental elements of a blockchain-based tax system. And I think the short answer is it's really hard. There are a lot of problems that need to be solved in order to get such a system. And, one of them is around digital identity. One of them is around privacy. One of it, what do you do with immutable transactions? If, somebody makes a mistake, how do you deal with dispute resolution? I could go on forever. The fundamental thing is that in order to implement such a system, we all know that a tax system needs to be flawless. It needs to function flawless. And I think the technology is not fully there yet. So for me, that doesn't mean that we shouldn't start experimenting with it and know what the impediments and opportunities are to get to the next level. But there are so many, let's say, challenges along the road that are not fully explored and understood yet in order to get there.
I think, because we've been talking for the most part about impediments and what's wrong, but there's also opportunity here, right? And I think it would be good to look at the opportunity, because taxation of in the token economy is going to come. It's not going to go away. I do not fully agree with you that the technology is not there. I think the biggest impediment is people and legislation. There's a lot of uncertainty and no clarity on the different regulatory bodies that are out there. Yes, we have MiCA, which is a very small thing, markets in crypto assets. But before we can do this, roll this out pan-European, all these different national systems need to be aligned, and they're not. So that's going to take a lot more time than the technology can do today. But on the other hand, if we're talking about NFTs with real art, we're talking about tokens for access to concerts, what have you. But there's another very interesting part, and those are goods that are non-goods. For instance, electricity. What if you want to trade electricity between peers? And we are all in a very big electricity changing to a green system. We can only do that if we digitize the grid and we start to implement systems where we completely automate exchange of value between one another. And electricity is a non-good, right?
Yes.
So their taxation, would really benefit from a tokenized economy. So I think it would be good, to also focus on the opportunity that is at hand and the real advantages that we could have. How do you see that? Because you're focusing on real goods,
yes,
and tokenizing real goods.
Well, we see a lot of opportunities. So, for example, I was talking to an art gallery last month here in Holland, and they do every transaction is quite a big transaction. So, for example, let's say 400, 500, 600,000 euros. And what they say is, well, when we sell through Christie's and Sotheby's, we don't know who our client is. So we don't get the information from the client. But it's also not sure if the client, when he resells the product, so there's a physical product, if he doesn't make a copy of it. So why not, if you, for example, sell a Mondrian, made me think of this, but if you sell a Mondrian, then how do you know it's a real Mondrian? Because you have the provenance. And when it's on the blockchain, that's like 100% half the proof. So you can make, I don't know, a QR code or make an RFID tag. So there are so many possibilities in the tokenization of real life assets. And I think that's going to be real huge. If, for example,
that's a low-hanging fruit, right? So
yeah, but I always give this example, and it's quite a bizarre example. I know that, but I was once reading a newspaper that people in South Africa, they had to show that they were South African to speak peace in their language. So to show that they were South African. And then I thought, so they have to show their passport, and then after that they have to show that they were South African through their language. And then I thought, this is so bizarre. Why don't you just get a fingerprint, and your fingerprint is a NFT, and then they see on the blockchain that you are really you, or you're really Alex. And those things are, for example, if you look at the Champions League final 2 years ago, there were, 2,000 people standing in line with a fake ticket. How could that be when you can put tickets on a blockchain and make a dynamic QR code which change every 2
That would
seconds?
be interesting. So you sell fake tickets, and do you charge 9% VAT on the fake tickets? And how would that work? And that would be an interesting use case, huh?
No, why not?
Yeah, why not? So that would be free money for the tax department. Yeah.
Yeah, but what I want to say is that there are so many solutions in true NFTs. And for example, if you look at tax regulations, it's already so that if you, for example, if you're a hairdresser, and I think 90%, you know that obviously better than I do, but I think 90% pays through their credit card now, or through their Apple Pay. Or,
Yeah, but that's also different in each country, right? Here in the West, in the
Yes, of
Netherlands,
course, but-
there's a lot of digital money, but
yeah, but it made it a lot harder for people who have a job which have a lot of cash money. So, for example, if you're a hairdresser or a second-hand car dealer or whatever, to do money laundering or to avoid taxes. And I think that's the good thing about the blockchain, is that everything is 100% transparent.
Mhm.
So, for example, if you buy, let's say, CryptoPunk worth $150,000, if you buy that, you can see the whole provenance, who minted it, who first bought it, who sold it, and it's 100% transparent and 100% after proof. So you can't do any things with it. You can't fake it. You can't do fake provenance.
so without disclosing clients, do you get clients like that?
Well, we get a lot of clients that are asking the question, how do I deal with this, right? How do I deal with if I don't know who my customer is? And obviously that's impossible, and especially when we talk about big brands, because I've worked for several multinational companies that want to do NFT drops, and and they've literally said, if we can't land on the tax and legal compliance consideration, we're not going to do it, because simply our reputation is worth that, is too much. So so we really need to have clarity on that. And I wanted to come back on the comment or the question maybe you said earlier, to focus on the opportunity. And of course, we can understand that from a tax administration perspective, the first thing we need to do is tackle fraud, tackle people that are underreporting on crypto, and so on and so forth. That is key.
Yeah.
That is now coming.
Consumer protection.
I think what is lacking, and if I take, let's say, a little bit of a broader view on what I see happening that other countries are doing, there are countries in the Middle East, there are countries in Asia that are now implementing digital asset regulatory regimes as well as taxation regimes to attract not only crypto investment, but more broadly to have clarity on regulatory regimes, clarity on tax regimes, on how to deal with digital assets more broadly, and whether it's carbon credits or energy or what have you. It starts with to have a framework in place, and I think that's where, for example, the Netherlands could really, I would say, almost up their game and do a little bit more in that sense. Really be the leader in a sense, and start exploring, hey, how can we actually attract that? Because what I see now, and I think a lot of, let's say, companies are also struggling with that, is that they face a lot of, let's say, headwind from regulatory bodies, and understandably, but let's also focus on the upside.
Well, why do you think that is?
Well, again, I think it has to do with underreporting and fraud and money laundering, but that is more around crypto, and I think we need to expand the conversation to digital assets.
Yes.
And it for me, crypto, it is, of course, it's an
Well,
it's
like
an
we say,
interesting industry.
Crypto
but
is a token, but
Yes.
token doesn't have to be a crypto.
exactly that. So, and if we want to focus on the opportunity, if we want to focus on specifically blockchain-based tax systems, or implementing regulatory regimes for NFTs, for DAOs and what have you, that's, I think, where a lot of, let's say, from an opportunity perspective can be done. And the same goes for carbon credit, obviously.
To be honest, I totally agree with you. And what I see in the field is that a lot of entrepreneurs, they go, for example, to the Middle East. So if you want to have a crypto bank in Dubai, if you start crypto or you start your own cryptocurrency or whatever, they all go to the Middle East. There are some very legit companies. So it isn't, that's what I just said. Like, people always think of NFTs and crypto, that they're all bad companies. And I always say, this is a bit of a funny example, but I always say to my mom, she said, "But what is really an NFT? I don't believe in that." And then I said, "But mom, there's a big chance you already have an NFT on your phone because she goes to comedy quite a lot. And then, for example, the Carré, Get Protocol, they offer NFT solutions to, for example, Carré to do ticketing on the blockchain. So then your ticket is quite likely already an NFT. And so, and if you, what you see, for example, in the Middle East, they think, okay, it's going to be challenging because where does the money come from? Where does it go? We don't know. But let's offer solutions and for those companies, what they can do with it. And here in Holland, for example, I asked our accountant, I said, how do we do that? We get a lot of Ethereum. He said, well, first transfer it to your private account, your private bank, and then from your private bank account, send it over to your business account.
Oh my goodness.
And it's really true. And it's not about, let's say, 2,000 euros. But those things are happening now in the Netherlands. And if you see my business partner, he lives in Dubai or lives there for 16 years, but he says here it's so easy. You just open a bank account and you can transfer Ethereum to it. And I don't know, even buy Ethereum on your bank account. And I don't know. And so I think that's a very good point you said. It's a lack of knowledge from the tax authorities, but also from the authorities itself. And they have so little knowledge about tokenization, about NFTs, about blockchain. And then they're going to make rules, and they just do it like this. Well, we think
so, but if we're going to have to up the game, and that I'm all for it. Let's up the game, and that should be our focus for 2023, and position ourselves. Then we need to help those professionals, right, in a positive way. But it's also our responsibility that we change the narrative rather than trying to be the nerds here at the table, which I think we should. We are.
I am.
Yeah, we should also create a narrative for your mother. When you tell her, Mom, you should buy an energy token, she looks at you like, what's an energy token, right?
Yes.
So it doesn't work like that. But if you tell her, you can go to Coolblue or Ball and buy a virtual solar panel, and you get a return without ever using the word blockchain, crypto, or token, then she gets it.
It's funny because a lot of my friends, they have children. I don't have children, but what I see with all the children, like around me, that they all ask when they have their birthday, that they all ask for money to buy online things. So they say, I want to, in Roblox, I want to wear, special shoes or whatever. I don't know if you have children, but
yeah, two boys. Yeah,
I see that a lot.
Recognize it.
Then you already buy an NFT, or you already buy a token, or you already buy something online, which isn't physical. So what I think is the difference between us and people who are 8, 9, 10, 12, that they are already used to buying stuff online, which doesn't have a physical version of it.
So
and I think you want to get to that state, right? Similar to now how we're sending emails, do we really care how that technically works? No, we just do it, right? And I think at the end of the day, we just need to use the technology as an enabler, in a sense, to do those transactions, whether it's a ticket concert or, V-Bucks in Roblox or whatever.
Well, thank you so much. We'll have this discussion, the expert session in 20 minutes from now, and we'll discuss it. It's all going to be part of a broader analysis that we're doing, how does tokenization impact the everyday economy, and how can we position, is there a level playing field in Europe? And I think taxes are for sure a very important thing. I think we touched on most of the issues that we think are fiscal concerns and tokens. And did I forget anything?
Well, I could talk about this topic forever, but I think the fundamental element is that we as a country have a great opportunity to lead the way based on all the knowledge that we have here and all the, let's say, on the ground experience to say, okay, this is where we want to go. Let's also take the lead in that, because I see countries around it. Switzerland, the UK is claiming to be the most digital asset friendly country in the world. And I'm not saying that they're getting there, but at least they're promoting themselves in a way. And I think in the Netherlands, we're sort of like more focused on, let's say, the regulatory side currently. So let's reverse that and let's take the lead.
And I also think it's good to have these kind of conversations, because I think that by start talking about it, that it also opens the way to regulation, and it also opens the way, because what happened, I think, in the last 5 years is that, for example, the government, they just put their hand in the sand and thought like, oh, this is going away or whatever, it will go away or vanish, or I don't know. And I think by having these conversations and by being here and by talking to the ministry, it's a good thing, I think, to open the conversation, keep the conversation going, and also show them in practice what we see and what's happening, or what you see with your clients, for example.
So we should have more conversations like this. Who would you like to see at the table next time?
Somebody from the Ministry of Finance, or maybe more importantly, maybe from the Ministry of Economic Affairs, to really understand what's going on and to embrace the opportunity, really.
Well, you're on luck. They're both here, this afternoon.
Awesome.
So
Looking forward
let's do
to
this.
it. Yes.
Thank you both, and I'll see you all on the next episode.
Thank you, Alex.
Thank you.
That was it for today's podcast. Thank you for listening in, and please subscribe so you don't miss out on our upcoming episodes. If you want to get in touch with us, you can find our contact details at www.twotokens.org.